Hello students, how are you all? I hope your preparations are going very well. This is Viresh, you are watching Virus Academy. Now, today we are going to discuss a small topic but yet very important topic. And institute is even asked a question also in the CA final examination because international taxation itself is worth 30 marks. Okay, and they are started choosing the corner areas. This is one of the corner areas but institute's favorite. Now let us discuss about this rule 128, that is foreign tax credit topic. Now today we are going to discuss about this topic end to end. Watch this video till the end. You will be clear of this concept of foreign tax credit as well as you can download the material also for your revision. Now let us start the video. Now the first question comes, what is foreign tax credit? So foreign tax credit is nothing but credit for the taxes paid in the foreign country. Credit for the taxes paid in the foreign country. So that means if SSE has paid any taxes, generates any income in the foreign country, and he has paid any taxes in the foreign country, for the taxes paid in the foreign country, he will get avail a tax credit in India when he is filing the return of income. That is simple what it is foreign tax credit. Just to give you an example, for example, just a minute. For example, A.R. Rahman. So A.R. Rahman went to a musical concert in USA, for example, and he has earned around dollars 1 lakh. While paying the money, US government, as per the rules, let us assume that 10% is the withholding tax rate, that is TDS. TDS is 10%. So 10,000 was deducted, $10,000 was deducted and paid the remaining amount to Rahman. So Rahman is a resident in India. He has to file his return of income in India and he has shown this 1 lakh in his return of income. Then there also he has paid. Again, he has to offer this income in India. He has to pay the tax in India. So while paying the tax in India, he can take the credit of the taxes paid in the USC. That is for 10,000, he can take the credit while filing the return of income in India. This is simply called as foreign tax credit. When you are hearing this example, when you are hearing this concept, one thing that will strike in your mind, that same kind of example, same kind of concept you heard in one more chapter. What is that chapter? DTAA chapter. Double Taxation Avoidance Agreement chapter. In that chapter also almost the same concept is there. Then how does Rule 128 foreign tax credit is different from DTAA? So these are not different chapters, both are one and the same. Both are talking about the same kind of a tax credit. So DTAA provisions, that is section 90, 90A, 91. These are the major provisions. 90, 90 and 91. These provisions talks about the foreign tax credit and reliefs like unilateral relief, bilateral relief, and how the credit will be SSC can avail, etc. etc. Whereas Rule 128, Rule 128, that is foreign tax credit, only talks about how exactly SSC can avail the credit. So what is the mechanism? For example, if the income is in the foreign income, like is in dollars, and which foreign exchange rate that we can use to convert the dollar amount into the INR. And similarly, what are the additional procedural concepts for there? And what kind of taxes can the SSC get credit for the surcharge in education cess also, or only for the tax portion? So those are all the procedural aspects. Procedural aspects were covered under Rule 28. Provision was covered under Section 90, 91, that is DTAA chapter. So the Rule 128 is nothing but an extension of the DTAA chapter. It is not different from the DTAA chapter. Rule 128 is as follows. So here you can see a bullet points. Everything, whatever is there in the rule 128, I covered into these bullet points. You can rely on this material. This covers the each and every concept specified in the rule 128. The first point is very simple point. In the example also we have discussed. If any SSC paid any taxes in the foreign country, he will get a credit of the taxes paid in the foreign country in India. That is the point number 16. But sometimes what will happen is he will receive the amount in installments that will fall into the different financial years. In that case, what we will do? So, for example, in this case, A.R. Rahman, so total amount, how much he is getting? $1 lakh. So, $1 lakh, he has received 50K, that is 50,000 in March 23. For example, March 23. And another 50,000 he received in April 23. For USA, it is in the same year because they follow the calendar year. But for India, we will follow the financial year, that is from April to March. So 150,000, one installment falls under 20 to 23 financial year. Next installment falls under 23-24 financial year. So to same source of income, 1 lakh amount is split into the two financial years. In this case, the credit for the taxes paid. How much is the tax he has paid in the US in this example? $10,000 for example. So 5,000 he will get in 1 year, 5,000 he will get in 1 year, another 5,000 he will get in the another year. So FTC also he should take proportionately. That is what the point number one says. Now the point number one, point number two. Point number two is very important. Point number two. Here it is talking about the exchange rate conversion. So very interesting. Listen. So what exchange rate that you will use? For example, in this case only, AR Rahman is getting how much? 1 lakh. So for this 1 lakh, which exchange rate that you will use to convert into the INR? That is more important, right? So which dates exchange rate that we will use? And what is the authentic exchange rate mechanism? What this law says is you can take SBA TT buying rate as an authentic source to see the exchange rate. So SBA TT, SBA telegraphic transfer buying rate, SBI, not for any other bank, only SBI government bank is the authentic one. So SBA telegraphic transfer buying rate that you need to use. In the examination, they will give you this information. What is SBA TT buying rate? They will give you that information. You need not worry about it. Now the most important point, on the last day of the previous month in which the tax paid or deducted shall be adopted. So what does this mean? This looks a little confusing. I understand. So I have given you, that's why I have given you some example here. For example, tax paid in the foreign country on 15th April 2023. So tax paid in the foreign country is 15th April 2023, for example. And which date exchange rate that you will use in this case to convert into the INR? While converting into INR, last day of the previous month, that is 31st March. 31st March exchange rate that you need to use. Further tax deducted and paid on 15th April 2023. So simply this rule says that is if you are making any tax deduction, any payment in a particular month, then on the last day of the previous month exchange rate that you need to consider. That is the rule. That is the point number two here. Point number two here, very important. You can note it down. Now the point number three. Point number three is about FTC credit you can avail on the income tax and surcharge as well as education cess also. On all of these three component of tax, you can take the FTC credit. But what if the same SSC needs to pay some interest and penalty in India for any non-compliance of any provision of the income tax? For example, he needs to pay around a penalty of 10,000 rupees. And at the same time, he is having a FTC credit of 10,000 rupees. Can he able to set off this FTC credit of 10,000 with the penalty of 10,000 or interest of 10,000? The answer is no. FTC credit shall not be allowed on any interest or penalty amounts for the non-compliance. That is all about this point number three. Now the point number four. In some cases, what will happen in the foreign tax related portion, there can be some cases going on, there can be some disputes going on in that particular foreign country. So in those cases, how the SSA can claim the FTC credit relating to the disputed income or disputed tax? So in these cases, what this rule says is, in those kind of scenarios, he can claim the FTC credit within 6 months from the end of the month in which the dispute is settled in that foreign country. He can offer that income, he can take the FTC credit. Don't try to go much into the deep into this particular point. All what you need to remember is, in case of any dispute in the foreign country relating to this tax, then he can avail the FTC credit within 6 months from the end of the month in which the dispute is settled. He has to offer that income in India and he can claim the FTC credit. That is what the point number 4 is talking about. If there is any dispute for the foreign tax. Next, the next point. Next point is, so sometimes SSC is liable to pay tax under MAT, that is MAT provisions, or AMT, alternate minimum tax. So in these kind of scenarios, whether SSC is still able to claim the FTC credit, the answer is yes. Even if the tax is payable under MAT or AMT provisions, still the SSC can claim the FTC credit. Next point is about the compliance requirements. To claim this FTC credit, there are total 3 forms or 3 documents needs to be filed. The first document is form number 67. So form number 67, let me highlight here. So form number 67, what is the purpose of this form? I will give you an example. For example, I earned an income in a country where India doesn't have a DTAA agreement. Then I would say that this income I earned from US or UK where the India has a DTAA agreement. So what will happen? I will take the FTC credit even though I'm not eligible. So there is a need to introduce this kind of a form, that is form number 67. So form number 67 contains the details of the income and specifying the nature of income, and there is a verification also. So with this what will happen is it brings a transparency and as well as the more and more details so that they can avoid claiming the wrong claiming of the FTC credit. That is the importance of form number 67. So for your better understanding, let me show you how this form number 67 looks. You can also search it on the Google and you will get this PDF copy. Let me show you the same. So if you see here form number 67, it contains the basic details. The first part is contains the basic details as well as there are some incomes as well as category of source of income and the amount of income as well as the how much is the tax was deposited. All those basic details will be there in the page number 1. And in the part B on the next page, it contains some questionnaire like whether SSC has already received any refund of the tax paid in the foreign country, etc. etc. Some questions they will ask. So he has to say yes or no. At the end, there will be a verification will also be there. This is how the form number 67 looks. Every SSC who wants to claim the FTC has to file this form number 67. This is the one of the 3 documents that I mentioned about. So we discussed the first one, that is form number 67. So point number A, form 67, we have just discussed this. And second one is second document that he has to file is proof of payment. Along with form 67, he has to file the proof of payment. Proof of payment in the sense whatever amount that he has paid in that foreign country, either the bank challan or the receipt or anything which shows as a proof of payment in that foreign country, he has to file along with form 67. He has to attach it along to the form 67. And third one, the last one is a certificate. So what is this certificate? This certificate he can obtain from the person who has deducted the amount. Like somebody has paid, somebody other party has paid to the resident, right? That person would have deducted the tax and made to the foreign tax authority that payment, just like TDS in our country. So that person has to provide a certificate to the resident saying that for this nature of income, I have deducted this much tax I have paid to the government. A certificate, just like Form 16 or Form 16A in India, that foreign country has to provide that certificate or self-declaration by the SSC. SSC by himself also can provide a self-declaration certificate that this is the source of income that I have, this much of tax deducted, etc. etc. He can actually make a self-declaration also. Or, and the third option is he can get this certificate from the foreign tax authority also. Tax authority, if it is issuing that certificate, he can get it from there also. So, in summary, what is the compliance requirements to claim the FTC credit? The first one is filing the form number 67. We have seen the details of form 67. Next is proof of payment. This can be bank challan or a receipt or any receipt. Third one is certificate. If you can see in the point number B here, this is the certificate that I am talking about. A certificate specifying the nature of income from tax authority of such foreign country. Either tax authority can provide that or person responsible for deduction of such tax, the payer in the foreign country, he can provide. This is nothing but form 16 or 16A in India. And certificate signed by the SSC. This is a self-declaration. So either of these 3 can be a certificate. So total there are 3 documents he has to file to claim the FTC credit. I hope you understand these compliance requirements. Okay, and the last point is that these documents, whatever the documents that I shared, that I have discussed earlier, should be filed by the SSC on or before filing of the return of income under section 139(1). These documents needs to be filed online. There are no physical copies. He has to upload this document while filing the return of income. Usually when he is choosing the form and when he says that he has a foreign tax or a foreign source of income, automatically these forms will be populated. He has to fill all of these forms while filing the return. Now sometimes there can be updated return also. Updated return concept also there, right, nowadays. So updated return under section 139 subsection 8A, if he filing an updated return, if there is a change in the foreign income also, he has to update these forms also. If he's updating in his income under the updated return, he has to update the foreign income also if there is a change in that. That is simply this last point says. This is all about FTC Credit. I hope you enjoyed this lecture. If you want more videos like this, just subscribe to this channel. I'm going to provide more and more lectures and as well as the summary copies also for the upcoming November 2023 examination or May 2024 examination. So keep engaged with this channel. By how do you engage? You can subscribe to this channel and share this video with all your friends as maximum as possible, because you can share the knowledge, it costs nothing.